Tesla stock, TSLA is the symbol. The latest financial outlook with the latest conference call, some perennial bulls calling it an absolute train wreck. But there is a slight silver lining for someone who's really into this company over the long haul. And that's one of the things that I think kind of separates a lot of sort of value investors versus individuals who are looking at the much, much bigger picture down the road. There are three basic divisions of the company. The automobile sector, with the Model S being the biggest seller car of all time, is slowly declining their rate of growth for even though they've had a stellar year. China will eat into that. But it's those other two areas that are really kind of shining a light as the potential for Tesla and Tesla stock. That gets those permabulls where they are always going to be looking to buy this stock on the dips. If you take just those two areas with their potential margins and what they could do in the future, that's a Tesla stock is a stock that could perform very well. In the meantime, it's still overpriced given current metrics. So should this stock drop even further, for anybody who's looking at this as the long picture, 2, 3, 5, 10 years down the road, Tesla stock would be a strong buy. Let's jump in and I'll show you some numbers. Here we're looking at Tesla stock. TSLA is the symbol. And of course, the latest financials and the future projections with growth for the autos division, despite having a great year in 2023. Train wreck was one of the words that really kind of stuck with me from a permabull for Tesla stock. But for anybody who is an adherent to this, where their outlook is many, many years down the road, Tesla is still a buy. And so when we see these prices moving lower and lower and lower, which I had started selling right around 255, 260, 265, if you look at some of my previous videos, the fact that the stock has moved as low as it has presents a long-term buying opportunity. You sort of step aside from revenue for the automobiles and you start focusing on energy generation and services sector, which are a small portion of Tesla's total business, but could roll out into something far, far bigger. Tesla will be an AI player. So you're probably going to see Tesla's stock being bought on the dips because, I mean, the thing just dropped $80 off of 265. Moving forward, taking a look at Tesla stock versus the NASDAQ. Whereas previously it was overpriced versus NASDAQ, now it's slightly underpriced. And I actually think that we'll probably see some more downside to Tesla stock. For me personally, yeah, I get it. You're looking to the future, way future. I totally get that. But I wouldn't be doing that. I'm more, when it comes to a stock like Tesla stock myself, I will play the stock as a trade, but not a long-term investment. What I would be looking for is for Tesla to drop maybe down to about $100, maybe even 75. We've been there before a while back, but should Tesla stock actually drop to those levels, and you consider the future potential with energy generation and services, should they continue to see double-digit growth in revenue and Tesla starts rolling out these, you're already looking at, with Tesla stock around 180, considering a 5-year growth rate for those divisions, Tesla stock itself yields about 5.5%, which is not bad at all. It outperforms that 5.5%, certainly outperforms the broader stock market at just shy of 5%. Moving forward, should you consider that, if there are moves downward, down to say 150, 125, if big players start to tap out, that just means your yield over the course of many, many years increases to say 7.5%, 8%, 10%, 12% annually. Breaking down the latest quarters, 2023 was actually a pretty good year for Tesla, for their automobiles. But with Chinese competition and the lack of tariffs, which I don't see the government kind of coming forward and saying, yeah, we're going to go ahead and put tariffs in. Instead, China is sort of an X factor in the fact that they want to dominate everything, but they're an economy that's probably going to decline rapidly to the point where I look at China and I say, take a look at Japan, who peaked in 1989, take a look at the Nikkei, and hasn't rebounded since, with a population that continually declines. Birth rates are sub 2, same thing with China. So I don't really look at the Chinese economy as a risk per se, because they're in a decline, and I think that they're in big trouble with their property market, replicating what happened in Japan back in 1989. So while there will be competition for Elon and Tesla stock, that's a ways away. 2024, looking for projected revenue of 112 billion. But look at that big jump in 2025. Now, I've seen analyst expectations going outward 2026, 2027, 2028. These are big revenue jumps. So when you take a look at Tesla stock and you see it's moved downward with their Tesla's margins and profit potential with these big revenue increases, yeah, it becomes a strong buy. So if we do see prices dropping down to say 175, 150, 125, any of those adherents who are sitting there saying, listen, long term, only care 25 years from now, this will be a massive player. When you're betting in accordance to those kinds of variables, these revenue increases are huge with appropriate margins outside of the auto section. This is a company that has a lot of future earnings projections, but it's going to take a while. Still, at this price, you're outperforming the S&P 500. For now, gross margin 17.63%. They're going to need to improve that. It has been sliding over the past couple quarters. Operating margins, slight bump here, still needs to be improved, and that will come from gross margins. Automobiles are intensive with capital, but the other divisions won't be as much, so your margins will improve. Net margins, we had a one-time earning for Tesla for net margins. You take away that $5 billion extra, and this number drops significantly. Nonetheless, at 10%, 11%, 12%, from a net margin standpoint, is a little higher than the broader S&P 500. That's solid, especially when you consider 2024 revenue and 2025 revenue with the other two divisions, segments of the company increasing at a much more rapid pace. Moving forward to earnings per share, again, 227 was the earnings per share, but there was a pretty big one-time earning there. Earnings per share projection for 2024 was $3.18, $4.45 for 2025. Earnings multiple, currently at 57 for the current quarter at the date of the earnings announcement. That's a moving target. Someone had left a comment that didn't quite understand that there's a current number which moves as the price moves itself. But I take that 57.74 the day of the financial earnings. So let's just break down where Tesla is and for 2024. The U.S. Treasury yield about 4.125 right now. I think this is moving a little bit. S&P 500 sub 5% at 4.95%. Priced 184. And then earnings projections, you're looking at the 318, which gives you a yield of about 1.72%. To me, significantly overpriced if you're only looking at 2024. when you factor in 2025, 2026, 7, 8, that 1.78% is actually low compared to what they would yield, Tesla stock would yield over the course of many years. Given that, the value investor in me would sit there and say, 1.78%? No way, not a shot. It's a tough call though. But what happens if Tesla stock drops significantly from here even further? Those individuals who don't want to wait. What if Tesla stock were to yield, say, 2.5% given 2024 earnings per share? That's not horrible. It's certainly below the U.S. Treasury yield, which is at about 4%. But what happens once you see those revenue increases for 2025? Your 2.5% yield for Tesla stock would all of a sudden increase to about 7.5% per annum over the course of 2 years. You're definitely beating the brakes out of the S&P 500 yield. So when you factor in those other segments of the industry or of Tesla stock, energy generation and services, their rate of growth is outpacing a pretty good rate of growth for automobiles. Personally, I wouldn't be getting into Tesla stock, TSLA, at these levels. I would want to see it drop even further. Then I'd probably sit there and say, you know what, I got a little extra money. Let me buy some and just sit on it for a while, considering a 5 to 10 year outlook. Because at those rates with energy generation and services, at the pace that they're growing, with the margins that they would get, they will outpace automobiles, even with Chinese competition. So it'll be interesting to see how this all plays out. In the meantime, of course, Tesla stock, I think we could test, say, 125 to 150, 125, 100. I think we could easily test those areas where we were just at back in 2022. Those are, at those points, considering the future potential of the other aspects of Tesla and Tesla stock, that would be a strong buy. I'm not 100% on board yet to go ahead and pull the trigger on something like this. I would want to see more sort of numbers coming in that sort of solidifies this. But analysts continue to kind of come out with the same outlook, saying, listen, all right, yeah, train wreck of a conference call. Basically just flushed the toilet, did this, whatever. But those other segments are what are really interesting to me, more so than an auto company. So should we see 175, 150, 125, 100 in Tesla stock? Tesla stock would probably be a pretty solid buy. Should we go sub 100? That would be on a long-term basis over the course of, say, 5, 10, 20 years investment. Tesla stock would do very well. For now, it's getting a little beaten up, and that could be a buying opportunity for anybody who would want to own this stock for a long period of time. Make sure to hit that like and follow button, and I'll keep you up to date with Tesla stock, TSLA. We'll see you in the next video.